All right, joining us now, the aforementioned poet, John Carney. Oh, by the way, he's the finance and economics editor at Breitbart News and co-author of the Breitbart Business Digest. Every day it is must-reading. John, you have been saying from day one, I've been joining you, but the Fed's move last September was political. I don't care. I mean, for all the reasons I said, all right? The numbers aren't any, the numbers don't prove him out. We don't need any big, we probably didn't need any changes in the Fed funds rate. And some people are now saying there aren't going to be any more changes in the Fed funds rate. But my point, before we get to the details of the economy, Powell has done what central bankers should not, must not do. I mean, there's such a thing as monetary politics. He has dragged the Fed to a new low. And I think it's going to take a while for the Fed to buy back the credibility that Jay Powell has lost for them.
Absolutely. He blew their credibility by not waiting until after the election. They have a meeting right after the election. They could have waited till November, cut then. Nothing in monetary theory would ever tell you you need to cut in September or else everything will fall apart. You can't wait till November. That's just craziness. It was a political move to begin with. I said they shouldn't do it at the time. They definitely shouldn't do it now that we have the data to back it up. And by the way, that was another reason to wait. They saw 2 months of soft data in the jobs market, and they said, that's it, we're going to cut. If they had waited, they would have seen the report on the jobs that just came out. They would have seen the CPI number, and they could have said, whoa, 50 is way too big. Maybe let's do 25, or let's wait till December to cut. What's the rush if not for politics?
Let me play some tape. Donald Trump's had things to say about today's CPI report and the Fed. Roll tape, please.
It was just announced that inflation came in substantially hotter than expected last month, double what was predicted, with much of the gain coming from food prices going up, rent and housing costs going up, and car prices going up. The fact is that the Federal Reserve brought the interest rates down a little too quickly. It was too big a cut, and everyone knows that was a political maneuver that they tried to do before the election, but they did the wrong thing. It was totally a political decision, and inflation has started to rise.
I mean, I think he's spot on. It just shows you, by the way, I was with him, I interviewed him on Friday for the Friday show, but it just shows you how well informed he is, okay? What he said there could have been said by any of the Wall Street economists.
Absolutely.
He knows the numbers like the back of his hand, and he knows when he smells a rat also.
He also knows what drove up inflation, which is a big detail that a lot of people don't have. Food inflation was very high. Car inflation was very high. These are things that are going to actually really hurt Kamala Harris because people are very upset. They say economy is the #1 issue. Inflation is the #1 issue inside of the economy. And they know that Harris is the incumbent candidate. She tries to say she's the change agent. We know that's not true. When they're going to the grocery store and finding that the price of eggs is 10% higher just in the last month, as you said in the riff, that is going to shock people. It's double. It's more than double. It was around $1.50 for a dozen eggs when Donald Trump was president.
Let me ask you a question. It's hypothetical, but you're running the central bank, and your inflation target has been breached for 3 years. In other words, your 2% is the target. That's been the target for all these big-time industrial central banks since, I don't know, 20 years, 25 years. It's been the target. Now, this is the worst inflation in 40 years. For the past 3 years, you're well over target, okay? What harm would it possibly do, A, if you waited until you actually got back to the target? I mean, actually, right, coincidentally. Or even B, suppose you'd undershoot. Suppose you'd let the actual inflation rate drop to 1.5 or 1. I mean, you've got 300 million Americans out there plus, right? Their prices are not going down. They don't have 2% targets, okay? they're waiting for eggs and gasoline and home groceries and all the rest of it. The level of those prices, which is still up 20% in the aggregate, 20%, there are no price declines,
right.
Nothing. Who's helping them? Now, the Fed may be talking to, I don't know, each other, Wall Street, or politicians running for president. Who's helping the middle class? Who's helping the lower income people who get hurt the most by the inflation tax?
Under Jay Powell's own theory that he started during the Trump administration, they should actually be undershooting. He said they should average 2% over time. So that meant when they were under 2%,
Yes.
he said we could go a little over. Guess what? We've been over now for so long that we need to actually undershoot inflation in order for it to return to trend. You're absolutely right on that. They have no business actually targeting just hitting 2% now. They should be targeting below 2% in order to bring the long-term trend back to where people expected it to be.
And on top of all that, mortgage rates, if you want to buy a new home, mortgage rates are going back up.
That's right.
Okay, they fell from about 7 to 6. I'm using round numbers. They're now about 650 or 660. So that's not helping anybody in the middle class or the lower class.
Look at the 10-year Treasury.
Voters. And I was just going there. The 10-year Treasury, which was heading to, 3.5% or so. Now that's back over 4%. And inflation, is proving to be very sticky, something you and I have talked about. It doesn't just evaporate. I mean, that's why the management of the Fed, and particularly Jay Powell, really Powell and a couple of lieutenants run that place, okay? They got, 600 economists, PhDs, or more than that. But he runs it. The vice chairman doesn't run it. The board of governors doesn't run it. He runs it, okay? The decisions are made by him and a couple of senior economists. They could have waited. There's no reason why they couldn't have waited. Or, put it to you this way, there's no reason why they couldn't understand what it's like for middle class and lower income people who have suffered through 20% plus price increases across the board, all right? Or mortgage rates, or home prices because of what the Federal Reserve has done. And on top of that, deficits, federal budget deficits, right, are running $2 trillion a year as far as the eye can see. We're not far from full employment. We still have high inflation. We're running deficits of $2 trillion a year, which by themselves are absolutely inconsistent with low inflation. And the spending number of Uncle Sam, the government spending number, was 11% this year. You're running 11% spending. You're running deficits of $2 trillion, which is 6 or 7% of GDP. And you're still above your damnflation target. You're still above it.
M2 is at the money supply is at the highest it's been for a few years now. It's been rising ever since April. So just throw that into it. The reason why the mortgage rates are going back up and the 10-year is above 4% is a vote of no confidence in the Fed.
Yes.
The market does not believe the Fed will be able to continue on the path it has set itself on, but it has put itself in a really tricky position. Because no matter what happens in November, if they suddenly turn around and say, uh-oh, we can't cut anymore, or oh no, we might have to raise rates.
Right.
That is going to look very bad for them, and it will look very political, particularly if Donald Trump comes in office and they need to hike up rates.
Right. Well, there's going to be a change in management when the law provides it's 2026, I guess, is how soon.
We've got Powell around for a couple more years.
But I'll tell you something. If the Federal Reserve were to have to turn around because of sticky inflation, sounds like a song or a Broadway show, if they have to turn around and raise rates, Jay Powell should resign. He should resign. The next 3 or 4 of them may be just as bad, but he should have to resign. Actually, Mickey Bowman, who voted against all this, should be the chairman. Anyway, John Carney of Breitbart, he's our chairman.